the whole reason the stock fell was because it was so expensive and not because the company was doing badly, like if
Yeah.
there was some issue with the company, then now you have a kind of a very low price for the same fundamentals you had when the stock was trading at like $100, right? And
Yeah.
so there's a lot of examples of this that are super interesting. And if you find one that's good, then you have potentially a good deal, you know?
Yeah, you kind
So
of
yeah,
find a
let's look
company that
at
is within a sector that is kind of gone up, but then it has gone through some issues, right? So people have kind of abandoned it. So you can find it at a lower valuation. Is that kind of the thesis that you say?
yeah, essentially like it's if the company went public, there was a lot of
Hmm.
hype around the company, but
Yeah.
it was in an industry that was growing rapidly, but nobody cared about the valuation. Investors did not
Right.
care what the company made in profit, didn't care about any of that stuff. They just bought the thing.
Hmm.
The valuation is arbitrary.
Hmm.
So what happens is if there's any dip in the market or if there's any issue with the company, obviously it's a small company, they're going to have growing pains. Any issue that it has will see the price dip drastically. In this
Hmm.
situation, massively, right? With the Teladoc,
Right.
almost, I don't know how many billions of market
Yeah.
capitalization wiped out. But if you come to this current point in time, you can look at it and say, okay, well, how badly was the business impaired? Was the business impaired?
Mm.
And is there value in it now? Because
Yeah.
they're doing the same thing that they did 5 years ago. You know what I mean? It's not like anything has changed.
Hmm.
It's just the price that has changed. So